Investors are in a holding pattern as they wait for the January PCE data on Thursday, but the recent run up to record highs as another bank raising its target on the S&P 500. Josh Schafer is here with the very latest. Josh.
Yeah, Josh. So Barclays coming out today and moving up their price target for the S&P 500 from 4,800 to 5,300. But we've found another part of their note potentially even more interesting, and they're sort of hinting in that note that the bull case, and their bull case is 6,050 for the S&P 500, is looking more attractive. And now we should note when analysts say that, that is not their official projection. They're not saying the bull case is what is going to happen. But they're saying when you just look at the dynamics right now, the key drivers of their bull case are big tech earnings continuing to outperform, which at this point, it would be hard to really say, at least broad stroke, why that might not happen. It's continued to happen, and that's the projections right now are for it to continue to happen. And then the other part of that sort of ties into it is the resilient economy that we've seen. So if we continue to see strong economic growth, then other parts of the S&P 500 might also start doing better. We see earnings rebound. So if you have earnings rebound in the other, or call it 493, even though I'm not sure we're really still saying Mag 7. If you have the other 493 start to rebound and the Mag 7 keep doing well, that would be considered a bull case, very good backdrop for stocks.
So 6,050, have we seen any other numbers like that, even in the sort of bull case? Because I know you've been going through a lot of these increases.
Yeah, the bull case, there are a lot of people that are talking about something like 6,000, maybe not necessarily in 2024, but in coming years relatively soon. So there's an interesting one I found, guys, out of Capital Economics, and they said they think that the S&P 500 could hit 6,500 by the end of next year. And what's interesting in Capital's call is they're sort of highlighting the previous tech bubble. And they're saying, well, let's assume we are in a bubble. And if we were in a bubble right now, and you go back and look at the valuations from the 2000s tech bubble, we're not even close. Like, everyone wants to call this a bubble. We're not close to a bubble in terms of valuations yet. So if you want to view this as a bubble, the stocks would go up significantly higher before that bubble actually bursts, which is sort of interesting when you think about the capital call, because, okay, if the bubble's going to blow up to 65,000, what happens if it pops is sort of what I was left thinking, and I don't think we quite have that answer. But I thought that was interesting, that essentially if we are in some sort of AI tech bubble, maybe we continue to just balloon out a little bit more.
Inflate.
Yeah. Inflate. Still the word of the day, always, inflation.